There are some very common mistakes that are made in trading. People will enter trades without any game plan, without any stop loss or protective option positions. They'll just say, you know what, I'm willing to risk infinite amounts. If I'm wrong a gigantic amount. And that's just not reasonable. You will be wrong eventually. If you put on enough trades, make enough investments, some of them are going to be wrong. So you've got to learn to keep those losses contained. Not understanding what you're even trading, whether it's high or low volatility, how much it typically moves on an average day, increasing position sizes to make back losses. The idea behind dollar cost averaging works if you're just a buy and hold, never going to sell. I'm going to buy stocks randomly over time and just stay invested. Then dollar cost averaging is fine because you'll buy more shares when it's down, you'll buy fewer shares when it's up, but you're constantly buying. Increasing position sizes, though, to try to make back losses is the worst idea because you're basically pouring more money after a bad trade. And if it's a bad trade, then that means it's trending against you. And if it's trending against you, it's more likely to continue to trend against you than to come back for you. So as traders, we absolutely, positively cannot keep throwing more money at a bad situation. Catching falling knives, most people become most inclined to buy companies that they're well known that are falling dramatically, and that in and of itself tells you it's a bad idea. If it's a well-known company, then everybody has had an interest, right? It's probably fundamentally overvalued because it's so popular, number one. Number two, if you're buying it just because it's something that feels comfortable to you, trust me when I say that there are some massively intelligent people that are selling and dumping those shares because something has gone fundamentally wrong. So a good example of this is 2008. People rushed in to buy financial companies thinking that, well, they're companies that I've banked with for years, for decades. So I'm going to rush in there to buy Bank of America and Citigroup and these businesses because they were collapsing. The problem is those collapses kept collapsing and collapsing further and collapsing further. So it became a situation where you were literally just falling a catching knife and getting sliced up. Don't do it. If it's a well-known company falling dramatically, there's probably a good reason for it. Trade the trend. And then finally, fear and hope. Trading emotionally but doing it incorrectly. I always like to say that these are the two great emotions in trading, and people have them completely incorrect. So let's think about fear. Fear and hope. Another way of saying this is, fear, greed, different things that come into play. But most people are fearful when they have a winning trade. Now, I know that sounds strange, but people get really fearful when they're in a profitable position. Why? Because when you have a profitable position, most people think, well, I've got to make a decision. And if I don't make a decision today to sell it, this gain could go away. So the fear is that this profitable position is going to go back to break even or even turn into a loser. That fear causes people to sell your gainers way too early because the fear of losing out on what you have right now. A fear that your profitable position is going to turn into a loser. People have a lot of hope in the financial markets. They are very hopeful with their unprofitable positions. Why? Because they're hoping that any day now this causes you to hold onto your losers way too long. Most people are very hopeful that their loser will come back, that it will break even, that if I buy more, I can average down my cost and get back to break even easier. These are traps that every person I've ever met has fallen into. You have to decide today, and I mean this, you have to decide today that you will not be one of those that hold your losers, continually hoping that one day you'll get back to break even. You have to be fearful of your profitable positions, that or not fearful but hopeful of your profitable positions that they can get even better. In other words, what I'm arguing is you literally have to turn these two risks, these two concerns on their head. If you can flip them around and switch the spots, you will make a ton of money. What do I mean by that? Instead of being fearful with your profitable positions, you should be hopeful. If you're hopeful, then you'll let your good trades become great ones. You'll take what you're up $500 in, and next thing you know, you're up $5,000. And you've got to eliminate hope with your unprofitable positions and be fearful that it can get even worse. If you'll put fear into your unprofitable positions and just bail on them quick and early before they become too big, and if you'll be hopeful with your profitable positions that they can grow further and become bigger and bigger gainers, if you can flip those two emotions, I promise you, you will do better in your financial future and in your investing.